Hello everyone, this is Jan from Dado Finance. Welcome back to our channel. We are with you on 12th of January on CPI data day. Alright, today, just 1 hour ago, we have received the data of United States CPI. So it was 7% year over year in December, and then core inflation is 5.4. So these inflation data is really critical because it is expected to be the peak of inflation rate in US. Reason because when we checked when they released the data, they have released the details as well, and on that details, and the biggest contributor to inflation is gasoline prices and energy costs. So that means if the price of oil and natural gas already not so high, but oil prices are so high compared to 22. So the price of gasoline, if they can manage to control that one, we will see decline in inflation and the base effect. So you remember, the price of oil has sunk to minus 37 in 2020 in COVID first months. So that was the base effect. So when we compare the prices of everything, we compare the prices with really low bases. So for example, in December and 2020, oil price was around $40, and then around between $45 and $55. But in December, it was trading some days 85. So this was really a high level of gasoline prices and energy prices. This has affected inflation. But when we just compare right now the price of energy and the other thing, we will next one. I'm just speaking about January inflation data. We will check that one with 2021 oil prices. It was about 60, and right now it is trading at 80. So it's not a big difference. So the inflation will start to decline. Everybody is expecting that one. Even Jerome Powell and the other Fed officials are expecting this one. This was the highlight of the data. All right. On this video, we will cover three main movers in the market: dollar index, which has sunk so bad, and oil prices and gold prices. Let me just check all of them together. Start with dollar index. And dollar index started to decline last night after last afternoon, I can say yesterday afternoon, with the speech of Jerome Powell. He just said, all right, we just go ahead with interest rate hike. There's no problem with that one, but we don't know the exact date yet. It may not be March. He just implemented this one. So with that speech, the dollar index started to decline, and today, after the data release of core inflation data, then it's just declined so fast. But this support level has worked perfectly, and right now, as you can see, it is just rebounding from this level, and probably with recent news we will probably see an increase on that one. You remember, I was telling that I'm expecting high level around 98, 99 level, even a 100 level is possible in dollar index in the coming months. But the unexpected cases like energy prices and other things are just making things worse, and even some analysts are telling that the energy crunch in Europe may affect the US prices. That's also another scenario. We will see. All right, this is right now, as you can see, is just climbing. these it will just like spend some time on these levels, but a rebound is on the way in dollar index. That's the dollar index analysis. Let's look at oil.
You are ready to win with us. GAN Markets.
All right, we are on oil chart. As you can see, oil is rising and rising, only rising on the last 2 days. And year to date, from the beginning of 2022, it has risen from this moment, like a 75 level to 82 level right now. So it is 8% gain only in 12 days. It's really big gain for US oil. But as I say always, so big gain means then a correction needed. It's not healthy without any correction. So it has reached the Kazakhstan thing is over. Libya maintenance is over. So the production increase as well in Middle East in OPEC countries has started. So we will see a decline in probably like a decline in a few days. And today, US inventory, crude oil inventories will be published as well. That's also important. Last night, unofficial numbers showed that only 1 million barrel last inventory has been built, and that was expected. So we may see a high build up in gasoline inventories, and crude oil inventories also may slightly decline. But compared to previous weeks, demand is just catching up with supply, so we will see some surplus in the coming weeks. That's possible scenario because the rig numbers are rising and productivity is rising, and demand is at the level of pre-pandemic. So everything is getting back to normal, but the thing which is not normal is the price, because even before there is no pandemic, and then there's no electric car and another blah blah, and the price of oil was $60, and right now $82. It is 35% more before, like compared to pre-pandemic level. It's not something right. We will see definitely a decline in prices, and you can catch it up and then you can make profit on that one. All right, let's look at gold price. All right, we are on gold chart. As you can see here, gold cannot go higher than an 1820 level, which is a critical level. A lot of people just thought that, all right, inflation is high and then people can hedge themselves with gold, but it didn't happen, at least for now. And even a decline is expected in gold prices. The reason is and 10-year bond yields are rising, and this is affecting the price of gold and silver. We may see a sharp decline in these two commodities. And let me just show you RSI as well. It also like reached to 70, and RSI perfect indicator for gold investor, and in many cases it works perfectly. Let's look at it in here. RSI closing to 70 and a decline, and closing 90, a small correction but still not a decline. And from 1790 level to these level 1820 levels, $30 increase. So it has to make some correction to take profit people should sell their position, to close their position. When people close their position, we see a sell-off in the market. This is happening in the coming of hours. So from this moment, probably we will see a sell in near future. All right, that was our analysis. And as I said, inflation is expected to be peak level at this one, and probably in the coming days we will see some other things as well. For example, you remember like a Biden administration said energy prices is just feeling the inflation, so we will release some gasoline from our inventories. So we may see the same thing again to curb inflation, to curb energy prices. If that happens, we will see lower levels in energy prices and lower level of inflation at the end of January. All right, thank you so much for watching us. We will be together on more news tomorrow morning with intraday analysis. Have a nice day. Bye.